Yeah.
Am I talking to you?
To answer you.
For real?
I would say that one of the most underappreciated, counterintuitive investment opportunities today is industrial outdoor storage in the U.S. The risk is low, returns are attractive, and to me, there's a lot less uncertainty about long-term demand and the long-term dynamics than other things, including data centers, which is very hot.
The biggest opportunity in commercial real estate is looking at the adaptive reuse of antiquated buildings, convert them from office to residential. We believe 30 million square feet in New York City will convert from an office today to residential tomorrow, and will bring much needed housing right into our central business districts.
Distinguishing what's a survivor asset and what's not, and pricing it appropriately. There's going to be a lot of assets that are thrown out as functionally obsolete, but in reality are survivors, and distinguishing which ones those are could be a great opportunity.
There's been a very strong focus on the U.S. right now. I do think that there are some pretty interesting international opportunities as well. And so we're seeing stuff, particularly in Japan. We've actually done a number of debt opportunities in Asia that we think, really get really strong risk-adjusted returns.
Student housing. If you focus on those newly developed student housing facilities just outside of campus, you're a winner.
Yeah, so I think what's shifting is that there's really a transaction market that's developing. And I still think where we'll start to see some transaction activity, and more of it, is in industrial, in housing, because those are the sectors where there is more market conviction for the strength of the fundamentals and underlying demand, and therefore more opportunity to actually see transactions and pricing align.
The biggest opportunity over the next 5 years, it's pretty clear, is in housing. I think the other opportunity is clearly in resiliency and sustainability. That real estate is not just someone who can help us with the built environment. Real estate has many of the solutions that are going to help further our goals as a global community to reduce the carbon footprint.
I honestly think the biggest opportunity in commercial real estate today is in the office sector, and particularly in the distressed office sector. Whether it's converting them to different uses or continuing for them to be offices, I think that's where there's probably the most interesting opportunistic return opportunity in real estate for the next 5 to 7 years.
Going forward, it's a selection story, right? It's an asset selection story. It is about, do you own the right asset? Can you generate NOI growth? If you can generate NOI growth, you're going to generate appreciation, get the returns that you're looking for.
So if you look at the capital movements over the last year especially, money that has traditionally gone into real estate product categories has been going into PE and prop tech and credit strategies instead of into the dirt. Development that's using new construction techniques like SIPS panels or resin-based robotic concrete or robotic painting. That's a tech aspect coming together with a traditional development aspect that I'd like to see more of that happening with the convergence of those funds.
It feels like from a timing perspective, secondaries are going to deliver a lot of value. But as with all things, you need to be really cautious as to what is in that pot.
I would really, if I had a pot of cash right now, I would target core office buildings. I would target still multifamily in obviously geographies with inward movements of populations. Also light industrial. And I would look at also, just looking at the demographics, I would look at student housing, elderly housing. Those are the markets that seem to be pretty interesting at the moment.